If you've been looking for the next big breakout opportunities in the stock market, especially in the biotech sector, then pay close attention because these stocks could be exactly what you need to turn a small investment into something life-changing. We're talking about new penny stocks trading under $5 with the potential to explode in value over the next few months. These are stocks developing breakthrough treatments for some of the biggest and most urgent medical challenges of our time: autoimmune diseases, genetic disorders, obesity, and diabetes. So today we are diving into 3 new penny stocks that have the potential to make you rich in the near future. These aren't random shots in the dark or hype-driven meme stocks. These are real companies backed by solid fundamentals, promising data, growing clinical pipelines, and growing institutional support from analysts and investors alike. So if you're serious about making money in the stock market, make sure to watch till the end and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. First on our list is Kyverna Therapeutics Incorporated, trading under the ticker NASDAQ, KYTX. Kyverna is a clinical-stage biopharmaceutical company committed to developing cell therapies for patients with serious autoimmune diseases. The company is pushing the frontiers of CAR T-cell therapy, a revolutionary treatment approach initially developed for cancer and now being repurposed to treat immune system disorders. CAR T-cell therapy has already transformed cancer treatment, and Kyverna's unique approach is to apply that same groundbreaking science to conditions like lupus nephritis, multiple sclerosis, and other autoimmune diseases with limited therapeutic options. Kyverna reported its Q1 2025 financials on May 13th, showing an EPS of $1.03, which beat analysts' expectations of $1.21 by 18 cents. While the trailing EPS stands at $3.38 and earnings are expected to decline next year from $3.29 to $3.73, the company is still in a pre-revenue, development-heavy stage, which is typical for biotech firms in clinical trials. The real value lies in the pipeline and the ability to turn clinical assets into commercial products. With a current stock price of $3.37, Kyverna looks deeply undervalued, especially when compared to its peers in the CAR-T and autoimmune space. Analyst sentiment backs this up. According to 3 Wall Street analysts who provided 12-month price targets over the last 3 months, the average price target is $16.67, with a high estimate of $25 and a low of $5. This suggests a massive upside potential of nearly 385% from the current price point. If Kyverna successfully navigates its next trial phases and moves closer to approval, the stock could easily multiply in value. Investors looking for a clinical stage company with a powerful therapeutic platform and strong new leadership should keep Kyverna at the top of their watch list. Second on our list is Metagenomi Incorporated, listed on the NASDAQ under the ticker MGX. Metagenomi is a precision gene editing company working on curative treatments using its proprietary metagenomics-based discovery platform. This company is at the forefront of the next generation of gene editing technologies, going far beyond traditional CRISPR tools. Metagenomi's platform uses natural microbial evolution and AI-guided optimization to discover powerful, compact, and programmable gene editing enzymes that can be used to treat a broad range of genetic diseases. On May 14th, the company took a major step forward by presenting 3 abstracts at the American Society of Gene and Cell Therapy's annual meeting in New Orleans. The presentations focused on its work in developing compact nucleases and a powerful gene integration system called CAST, which stand for CRISPR-associated transposases. These technologies could solve some of the biggest problems in gene editing today, specifically the safe and efficient insertion of large therapeutic genes into target cells. The proof-of-concept data shared at the meeting showed promise for type 2 and type 5 nucleases that can perform efficient in vivo editing. In terms of financial performance, the company reported its Q1 2025 results on May 13th. The EPS came in at 68 cents, missing the consensus estimate of 62 cents by 6 cents. Revenue for the quarter was $4.13 million, which also fell short of the expected $8.75 million. The trailing EPS is $2.11, and next year's earnings are projected to decline slightly from $2.46 to $2.52 per share. This reflects the company's continued investment in research and development, which is critical at this stage of growth. Despite the financial losses, analysts remain bullish. The current stock price is just $2.30, but analysts covering the stock have issued 12-month price targets ranging from $7 to $16, with an average target of $10.33. This represents a projected upside of over 359% from the current trading level. Metagenomi is uniquely positioned to lead the next wave of innovation in gene editing. As its platform continues to show proof of concept success and more partnerships develop, the company's valuation could skyrocket. For investors seeking exposure to cutting-edge biotech innovation with long-term upside, Metagenomi is one of the most compelling penny stocks on the market today. Last on our list is Fractyl Health Incorporated, trading under the ticker GUTS. Fractyl is a metabolic therapeutics company developing therapies to address the root causes of obesity and type 2 diabetes, two of the biggest public health crises in the world. Unlike traditional pharmaceutical approaches, Fractyl is focused on procedural interventions that aim to restore metabolic health without chronic drug use. Its lead product candidate is called Revita, a minimally invasive treatment that targets the duodenum to reset metabolic pathways. On July 18th, Canaccord Genuity reaffirmed its buy rating on Fractyl with a price target of $12, following the release of new data from the company's ongoing Phase 3 trial of Revita. The data was presented at the American Diabetes Association meeting, and Canaccord followed up by speaking with several top U.S. physicians from large academic hospitals. In Q1 2025, the company reported R&D expenses of $19.4 million, up from $14.4 million the previous year. Selling, general, and administrative expenses came in at $5.3 million, down from $7.1 million, thanks to lower stock-based compensation. The company reported a net loss of $23.7 million for the quarter, up sharply from $3.3 million in the same quarter last year, primarily due to non-cash changes in the fair value of notes and warrants, along with increased operating expenses. As of March 31st, 2025, Fractyl held approximately $42.1 million in cash and cash equivalents, which it believes will fund operations into Q4 2025. The stock is currently trading at $1.86, but Wall Street is optimistic. Based on recent ratings from 3 analysts, the average 12-month price target is $9.33, with a high estimate of $12 and a low of $6. Even the most conservative forecast implies a return of more than 220%, while the average target suggests a gain of over 400%. If the Revita procedure gains regulatory traction and more robust clinical data is released, Fractyl's valuation could move rapidly. For investors looking to tap into the massive potential of metabolic health solutions with an innovative edge, Fractyl is a promising name to consider. Well, that concludes our list of the top 3 new biotech penny stocks with huge upside potential. These companies are still in the early stages of their journeys, but each one is working on cutting-edge science that could transform how we treat major diseases from autoimmune disorders and genetic mutations to obesity and diabetes. Kyverna Therapeutics is tackling autoimmunity with next-generation cell therapies. Metagenomi is rewriting the playbook for gene editing. And Fractyl Health is reimagining how we approach metabolic disease. These are not just speculative plays, they're visionary companies with the science, leadership, and analyst support to deliver real value. So if you're looking to add high-potential biotech stocks to your portfolio, make sure these 3 are on your radar. Don't forget to subscribe and turn on notifications so you never miss our latest updates on the market's hottest opportunities.